Welcome to Profit Insights. I'm Dusty, your guide through the world of finance and economics, where clarity outshines complexity. Today, we're diving into the latest financial and economic developments as we take a quick tour from Wall Street to global markets and beyond. Let's kick things off with some recent news on the U.S. economy. The first quarter of 2025 saw a 0.3% contraction in GDP, the first decline we've seen since 2022. It seems many businesses rushed to stockpile imports, preparing for new tariffs, which ended up distorting these GDP figures. It's a classic case of short-term moves with long-term impacts. But don't let this alarm you just yet. Analysts are anticipating a potential bounce back in the second quarter as import activities normalize and stocks get sold off. In March, we also hit a record-high trade deficit, again largely due to this import rush. While these figures might cast a shadow on the economic horizon, they provide a necessary context and opportunity for course correction. Adding to the mix, consumer confidence has dropped to a 5-year low, a stark reflection of the current uncertainties. It's a natural reaction in times like these, yet it's worth keeping in mind that economic confidence often moves in cycles. Over to the Federal Reserve, it decided to keep interest rates steady for now. However, the whispers of potential rate cuts later in the year are growing louder. It's their subtle nod to the softening economic data we're seeing. Now, let's shift our gaze to the corporate world, where Microsoft is making headlines. They've reported a 20% revenue increase in their cloud division, thanks to the booming demand for AI technologies. This surge in their cloud business has sent Microsoft's shares jumping 6% in after-hours trading. It goes to show just how transformative and lucrative the tech landscape continues to be. In the automotive sector, a noteworthy development from President Trump: temporary tariff rebates for U.S.-based car manufacturers have been announced. It's a strategic move to ease the pressure of upcoming tariffs on imported car parts and gives a bit of breathing room to the industry that's been facing challenging headwinds. Looking beyond our borders, we turn to Europe, where Spain and Portugal experienced their largest power outage in 2 decades. A sudden frequency drop in Spain's power grid triggered this disruption, and while investigations are ongoing, it certainly highlights the vulnerabilities within energy infrastructures. In China, manufacturing activity has sharply declined, sparking concerns about weakened global demand. How this plays into the bigger picture of the global economy remains to be seen, and it's certainly something to watch closely. Now let's wrap up with a peek at market performances. The U.S. market saw some solid gains. The S&P 500 rose by 0.54%, the Dow Jones by 0.72%, and the Nasdaq Composite gained 0.65%. Meanwhile, in commodities, crude oil prices nudged up to just over $69 per barrel, and gold continued its climb, rising nearly 1% to over $2,600 an ounce. These moves underscore a sense of cautious optimism among investors. Before we close today, a quick tip for investing in these uncertain times: diversification remains one of your strongest allies. It's all about spreading your investments across various sectors to mitigate risks while opening avenues for potential growth. Thanks for tuning in to Profit Insights. Remember that while markets can change rapidly, understanding the broader trends can help you stay ahead. Until next time, when the dust settles, only the truth remains.